Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. In this week, we're going to be talking about Under Armour's most recent quarterly results. It was their fourth quarter. It's been in the news a lot recently because they're coming off of what was a terrible third quarter for them. So all eyes were on Under Armour when they reported last week. So this week, we're going to go over what went well, what went wrong, their 2018 projections, where they can improve, and just kind of look as a whole where the company is today and what people are saying about it, because there's people who would say this is, oh no, run for the hills, Under Armour's doomed. And then there's people who are saying now's not the worst time to buy in. It's relatively cheap at this point in terms of where the stock price is itself over an extended period of time. But before we get into all that, I just want to give a little brief backstory. So last quarter, in the third quarter, was Under Armour's first big oh no, as most of you probably know. Sales fell for the first time since they went public in 2005, and at the time, CEO Kevin Plank said that two contributing factors led to their first real downturn as a company. One was tough conditions in their largest market, which is the United States, North America, and then complexities as a result of rapid growth. And since then, they've tried to streamline their business model and streamline their go-to-market and focus more on online sales, which is what nearly every retail company is trying to do. And it sort of worked in the fourth quarter. I just want to get right into that. So the fourth quarter, they reported last Tuesday, they reported a fourth quarter net loss of almost $88 million. That was due in large part to the new Republican tax bill, a one-time impact from that, as well as $36 million attributable to their restructuring plan. And that was their 2017 plan. They have a new plan coming up for 2018. But on an adjusted basis, which is what we look here at Zacks, their earnings were relatively just flat. It was zero. We were calling for 1 cent a share. So they just missed it. Not terrible there. Their fourth quarter revenues did jump 4.6% to $1.37 billion. They're still a small company compared to the company they're trying to be, which is they're trying to be the Nikes and the Under Armours. They are the Under Armour, the Nike and the Adidas of the world, but they are at this point just way smaller than them. But a good sign is their sales did jump. It was the holiday period. That's never a bad thing that their sales rose. So one thing they can hang their hat on is definitely that in their holiday quarter, it was relatively strong, and their direct-to-consumer sales jumped 11%. Like I said before, that is good. Wholesale revenue had really been the biggest part of their business, and that is something that retailers in general are trying to get away from. They're trying to do more online sales. It's cheaper in the long term for them, and it's just how consumers at this point are transitioning into more online purchases. Another big good thing they did this past quarter was their footwear sales were up 9.5%. That is something they really need to focus on. Footwear is a big deal for Adidas and a big deal for Nike, and it hasn't been the biggest part of Under Armour's business, and it still isn't. So long term, if they really want to compete on a big international scale as one of these huge sports apparel companies, they're going to need to have their footwear sales grow a lot more. And another real big positive is their international sales jumped huge, 47% overall, like 45.5% in Europe, the Middle East and Africa, and then their other big market that they talked about was the Asian Pacific market. They were up almost 56% there. So that's both a great sign. To grow internationally at all is good for them. They're at this point really only a US-based company, whereas Nike and Adidas are established all around the world. Nike is obviously an American company and Adidas is German. Adidas is slowly moving into America, and now they're getting huge here in the States, and Nike's been basically entrenched all over Europe and Asia for a while. So to compete, like I said, long-term, which is what they're trying to do. They're not trying to be a small little company. They're trying to get to be the point of an Adidas or a Nike. They're going to need to see this continued international sales growth. But those were the good things of the quarter. I want to look a little bit about the bad of the quarter, because for as much as the stock price jumped right after they reported fourth quarter earnings, there's not that much to be super excited about right off the bat if you just look at the simplest revenue factors. So their non-domestic sales still only account for 23% of total revenue. So that's their international sales. 23% is going up. It's still way too small for where they need to be a big international company. And the other problem is that as those sales still don't account for much, North American sales fell by 4%. And this is relatively industry-wide. Nike's sales fell in North America by 5% in their most recent quarter, while their international sales rose as well. So it's not just Under Armour that's struggling in North America. A lot of companies are struggling. It's a more saturated market. There's just more players in this apparel market that Under Armour is trying to compete in, but it's not a good sign that their biggest market is also seemingly going to be a declining market for a while. They pointed to specifically that they assume in 2018 domestic North American sales are going to fall again as well, and international sales are going to go up. And another problem that Under Armour has that maybe listeners don't really think about is that their apparel sales went up 2.5%. That's not a bad thing, not necessarily the best thing. And that was up to like 951 million. That's a good thing in general. But if you look at their company as a whole, that is really not where they need to be going. Apparel still accounts for 70% of their total quarterly sales. They need to be more of a shoe company. Like I was saying earlier, shoes just need to be a bigger part of their business. Shoes make up only 20% of their business. And if you look at Nike and Adidas, footwear makes up 60% of their total sales on average. It's just a more expensive product. It's a product people buy more of, not necessarily buy more of and compared to a shirt, but people and the customers they're looking for, especially here in the States and internationally in big expensive markets, are buying lots of shoes and they're wearing them more than ever in different situations. But I'll get into that aspect of the brand a little later on. So to summarize the fourth quarter sales, there was a lot of numbers out there. The basic premise is their sales are declining in North America, but that's happening for Nike as well. Their international sales are going up, which is a good thing. And apparel sales are going up, which is a good thing. And footwear sales are going up, which is a good thing. But they're still on the wrong spectrum of those things. They need international sales to account for way more of their business, and they need footwear to account for way more of their business because the U.S. market is just declining in general right now. Who knows if that's going to pick up anytime soon, and they just need to grow internationally. And it's not going to be super easy for them at this point, but like I said, I'll get into more of the speculative nature of their business a little bit later on. Looking for what they could do, there's more restructuring they're planning on doing in 2018. They've already fired 300 people in 2017, and their business is going away from Dick's Sporting Goods, which is a good thing in the long run because Dick's Sporting Goods is on the decline, Foot Locker's on the decline. Those in-store retail businesses in North America are just declining. And one thing to really watch out for is right now, Under Armour just really doesn't present much value, and it really has very little value when you think about long term. Do you think this brand is something that is going to become, do you think it's going to become a Nike? Do you think it's going to become an Adidas? Because right now it's trading at 95 times forward earnings, and Adidas is at 23 and Nike's at 29. And that's just a mind-blowing number. That's something that people who are investing in Tesla or these computer chip companies or a company that's investing in AI right now would expect maybe. Not a company that's selling athletic gear and tennis shoes. There's not all of a sudden going to be a huge, massive uptick on the value of tennis shoes long term. So that right there should scare away and probably will scare away a lot of investors in the long term if that doesn't get fixed right away. But looking a little bit towards just 2018, itself. I think I mentioned this before already. Under Armour does expect their sales to jump in the low single-digit range. Our projections are calling for, I believe, 4.7% for the full year growth in revenue to hit about $5.15 billion. So that's a good thing. Sales are going to go up at a little less than 5%. Once again, they do expect sales to decline in North America, and that's just going to be a trend, like I said, for a while. And they also do have another restructuring plan for 2018 that's going to cost them between $110 and $130 million. And they hope by 2019 that it's going to save them a minimum of $75 million a year. So that's a good sign, I guess, for now. So 2018, they're going to be spending a lot more money to eventually, hopefully, save a lot more money in the future. And now the question is, where can they improve at the moment? And one of the first things I would say is, at least it seems that they've gone through all of the executive shakeups they can at the moment. They've hired a new COO, a new CFO. They've had some other changes from some other top positions in 2017. So going forward, maybe if there's just some more stability at the top, they have the people in place long term, or at least for the next 5 years. That's a good thing going forward. But in general, what they really need to do is they need to start creating more of a brand sense in people want to wear Under Armour. At this point, they became a company that was driven by actual performance wear, and that's how they started. That's how they had that dry and heat gear and the cool gear, that skin tight stuff that Under Armour became famous for. And that's just no longer going to be their growth business model. They have to be a company that can grow in athleisure wear, something that people can wear casually and not in a performance sense, not going to the gym. They can wear it hanging out on the weekend. And especially with footwear, they need to have shoes that you would see someone in a city wearing at some point that's not running in the gym or playing basketball. They need footwear that's translatable to all different aspects of life. They have to get beyond this performance-based model, which they're trying to do. I would say relatively unsuccessfully at this point. I can say, and this is anecdotal and that's not always the best, but I don't think I've ever seen, we live in Chicago, the show's hosted in Chicago, and I take the L to work, and I don't think I've ever seen anyone wearing Under Armour shoes on the L, and I see people wearing Nike and Adidas shoes when it's not miserably cold and snowing out every single day. And I know that sounds like, oh, that's just an easy thing. That's just a story. But that is not a good sign to never, ever, ever see anyone wearing Under Armour shoes outside of a gym. My producer just held up a note. Thanks, Danny. He said they were dad shoes. And that is not what you want. And going forward, they just need, like I said, they need to grow a brand, a cultural awareness of their brand, just a cool factor. And it's really, you can't buy cool. It has to be cultivated over an extended period of time. And they have athletes. They have Tom Brady and Steph Curry and Jordan Spieth and Cam Newton and Bryce Harper. They even have The Rock. I mean, Dwayne Johnson, who's in every single movie ever made in the last 5 years. But at this point, it hasn't translated into really anything substantial at all. I mean, the Steph Curry 4 shoes they've been well received compared to his last shoes. But like this past weekend, the All-Star game happened in Los Angeles. I think out of all the guys in the game and all the skills competition and the dunk competition, Curry might have been the only person wearing Under Armour at all. That's not a good sign. It's a Nike league, but there are some stars that wear Adidas. And besides Steph Curry, they're completely irrelevant in basketball. So that's not a good sign because people do buy basketball shoes. It's declining. One positive sign is their Jordan Spieth shoes are doing well. Golf has been an okay market for them, but that's not really like on a big scale of growth. Most people aren't buying golf shoes. Golf's not a widely popular sport, even though I like to play golf and I lots of people do, but that's not how they're growing. They need to grow in the sense that they have everyday wearing shoes. And I was looking on their website and then scrolling through their Instagram page, and they just came out with this new, I don't want to butcher the name, but I think it's just Hover. It's HOVR, all capitalized. It's their new line. They kind of are in the same vein as a lot of the Nike shoes and Adidas shoes you'll see. They look like the original. It's hard to describe it, but they're between $140 and $110. They look okay. If this is their big push and this is what they hope people are going to start wearing on a weekend basis or outside of the gym, I would say they should try again, because I don't think that's going to work. I think maybe younger kids would wear them, which isn't a bad thing. But in the sense that they need to grow a brand internationally, and that's what they're trying to do. I know this might sound too easy as well. They have no presence in soccer whatsoever, which if you aren't aware, if you live in a hole, soccer is the biggest sport in the world, just not the biggest sport in America. They sponsor one Premier League team, so that's the English Premier League. It's Southampton. They're a pretty much middling team that most people, even in England, don't care about, and most people in the United States definitely don't care about. It's not a team that you'll see a lot of people wearing their jerseys. They had Tottenham Hotspurs. They lost them out. They lost that right to Nike. Within the top 5 leagues in Europe, I think they sponsored just Southampton. I was trying to go through all of the kits for 2017-18, and I think only Southampton, out of all 5 of the top leagues in Europe, they were the only sponsor. So there's Puma and all these other brands a lot of people in the States have never even heard of. And then looking to the World Cup, which is the biggest sporting event in the world every 4 years, they have no teams in the World Cup. Nike has 10, Adidas has 12, Puma has 3, New Balance has 2 teams they're sponsoring. So there's no presence, and I know it sounds easy to say, oh, and that doesn't translate to necessarily sales, but if no one's seeing your brand on big, huge international events and on cool athletes that they look up to, I mean, you're trying to cultivate cool, and if you're never in a situation where anyone who's an aspirational type of person is wearing your gear, I don't really know what you're doing. So they're sponsoring people at the Olympics. They're sponsoring the speed skating team and the bobsledding team, but no one bobsleds or speed skates. So that's kind of an ancillary thing when they really need to be focusing on sponsoring soccer players and basketball players. And they have Steph Curry. That's great, but it hasn't translated anything. And something I found really fascinating was if you look at their social media presence, in that, once again, if some people could say this is just, it's too simple, it doesn't translate actually to sales, but this is how they're growing. All these brands are growing online, and all sales are transitioning to online sales. And now you can buy stuff directly from Instagram. And so for Twitter, Under Armour has 966,000 followers. Nike has 7.4 million followers. And they have a bunch of different accounts. Nike has sportswear accounts and basketball-specific accounts and soccer-specific accounts. And Under Armour does as well. And then Adidas has 3.4 million. So Nike has 7.4, and they don't even have a million. And then in Instagram, which is becoming widely popular, Facebook owns them now, if you don't know. It's a photo-sharing app, which you can buy stuff directly from Instagram now. They have 5 million followers on Instagram. Nike has 76 million. And I didn't misspeak. They have 5. Nike has 76 million. And that's on their just basic Nike account. Adidas has 18.5. They're just getting blown out of the water there. Lululemon has 2.3 million people following them on Instagram. So Under Armour, that's not a good sign long term. If you're trying to grow your business in this new age of online marketing and online sales, to just be so far behind at this point is not good. Nike's sportswear Instagram has just as many followers as Under Armour's main Instagram, and that's just like an ancillary Nike account. So I that sounds easy. It sounds too simple to surmise it as just, oh, well, they don't have that many Instagram followers. That's not good. You're trying to grow your brand in the youth. You're trying to grow on an international stage. In what easier way to grow your brand than through Instagram, which now almost 1 billion people use around the world, and to be that far behind who you think are your competitors, Nike and Adidas, is a bad sign. And that kind of brings me to my final point, is that as of now, I would say Under Armour has a better shot of becoming a forgotten brand that Adidas is trying to turn around like Reebok than ever becoming Adidas, or certainly ever becoming Nike. And we'll see what happens. And 2018 is going to be another year where they're restructuring. Maybe 2019 things see an uptick. But for now, I'd bet on Under Armour going through continued troubles, and they're just not growing in the spaces they need to grow, in that athleisure space, in that off the court, off the field space. But we'll have to wait and see. And that does it for another episode of Full Court Finance here at Zacks. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.